Hello everyone, Jason here. Today is Saturday, February 10th, and this is our aftermarket review for February 9th. Before I go into the review for this week, it was a very eventful week. If you joined us on Monday, you saw over 220 ticks worth of wins. If you were here Tuesday, Wednesday, Thursday, you saw me get chopped up a little bit in these extra volatile markets. So we made a decision on Friday, especially on the ES, to trade just one lot. With the wild market swings and the information that was being delivered to us on the charts, we decided to take it down, the risk down to one lot. And that was actually a really good decision because we did end up taking a few stops early in the session, but because our risk was lower, it provided us with an opportunity to catch a couple of really nice trades, one on the CL and one on the ES. But the ES was a 33-point trade, not 33 ticks, 33 points on one lot, and it was a massive trade. We're going to talk about that trade here in just a second. You're also going to see me take a CL trade on two lots. We started out just trading one lot over there, but we had a particularly good setup that we were comfortable with, and so we ran with two lots on that, and combined together, both of those trades were well in excess of 250 ticks. Not both individually, but both together, they were in excess of 250 ticks. Anyway, we're going to talk about both of those trades here. But if you joined us, like I said, on Monday, you saw a very similar type trading day. We had an awesome trading day on Monday. Tuesday, Wednesday, Thursday, it was choppy, and we got bounced around a little bit in all of this extra market activity. We kind of recalibrated heading into the session on Friday, like I mentioned, and we were able to get a couple of really nice opportunities. All right, so let's talk about this 33-point ES trade here. First thing I'm going to do, I'm just going to turn these levels off here for a moment. I want you to look at this area that I have highlighted here in this box. And so what you could see here, the top of this range was right up around 89.75, and you had that contains most of the candle volume. In fact, you could bring this down just a little bit to here. Right, so if you just kind of use that candle body as your anchor point, this double bottom formation, and then spread across, you could see that we had some really good price action along that area. And so when we ended up getting into this trade, and by the way, the one thing I do want you to see here, this is a fairly normal looking chart, but I want you to take a look at this: 25.66 quarter, 25.84.75. So that's in excess of 18 points in this one bar on a 5-minute chart. So that gives you some sense of the volatility that was in the marketplace on Friday, which is, again, another reason why we ended up taking a one-lot trade, reduced our risk down to one lot, and then expanded our targets and our stops. Normally, we take a 2-point stop. What you're going to see here when I get into this trade is it was a 3-point stop this time on one lot. All right, so as we were getting into this price action here, you're going to notice the double top right up here at around 98. Let's turn on these structure signals here. And so this was a midpoint for us, our daily structure mid. It's an area that we look at on our chart. It is in our market maker level suite of tools. We had come down basically at the beginning of the session today. We went from kick the signal 26.13 quarter all the way down to pay the target at 25.69. We did not catch that opportunity. Again, market was just really swings, big swings and volatile. And once we got up here into this double top and we began to rotate around this 89.5 area, this is where I'm ultimately going to get in short. We let it come down here into this double bottom. We could not get back up here to the ETH session open price or back into this ETH session open price and back into settlement was also in this area. And we did take a couple, I should refrain here for a second and kind of recorrect this. We did come back, we did take a couple of small stops in this area here. In fact, when I pull the price ladder over in front of you to get into this trade at 89.5, you'll see that we're down $250 on the ES. And that again is on a one lot. So we've taken a couple of stops trying to get short here in this zone. It's right in this area here where we did get the short. It did kind of pop up to 92. My stop was at Actually, my stop was at 92.5. So we ended up getting in, pulling back, and then it almost stopped me out up here, missed me by half a point. And then, of course, the market comes all the way down, and we ended up getting trail stopped out at 33 points. So the market just really sold off aggressively. The 33-point trail stop. What we were looking for here, there was 54. That was where we were talking about targeting. And then, of course, the market comes back down here all the way down to 38.5, and then almost immediately rejects out and takes me out at around 56.5. So again, very aggressive swings today on, and again, we did this on one lot on the ES. So we ended up with a $1,650 trade on one lot on the ES today, and that is how we got into that position here. Once we began to see that the market could not make it up into our next market maker level, we were closing below this area here that had been very much price had been very attracted in this area, and so we ended up catching that move for, like I said, 33 points on one lot. All right, let's talk about the CL here for just a minute, and I'll explain how we got into that. Let me move this set of charts over here in front of you. So one of the things here that we've talked about over the course of this week is we had this drawing tool here where we were looking at this cup and handle formation, and you measure the bottom of this cup to the top of the handle and project it out. That's what this pinkish purple line is. That would have been the target. It missed the target by a couple of ticks. Now this was going back into late January, and so we ended up with a triple top, 1, 2, 3 triple top. And if you measure this area here, right, this is the high at the first time we hit the top, down into this swing point, came back up, we had a high, lower high, and we were expecting the market to break down. And then basically what we said was that the measured move from the top of this down into this break point here, the swing, measured here on the breakout area, right? So if it was going to break at this point here, then you would measure that down and into this zone here, and you could see how price really just kind of rotated around that before it ended up falling off. And so we had a couple of sweet spot retracements here that we were looking at in the market here on Friday. Number one hit in the overnight session was down here around 60.20, pulled back up into 80, so we got 60 ticks. And so 59.77 was an important area for us here. Now again, this is a 1 hour chart, and so we knew that this was going to be a support area and that you could get a possible bounce out of this 59.77 area. Once price started to rotate, and I'm going to show you this, once price started to rotate out just a little bit, we began to contemplate not using this as a support area, but using this as a resistance point to try to get down to 59.19. Now, you're going to hear me talk in the video about getting down to 59.19, but obviously it comes all the way down to 58.06. What I was doing was holding on for a little bit bigger target into the 90s. And so if you were just to measure this swing out here, okay, measure that swing there, we were looking to come down into this 93 area, this 161.8. In fact, it overshot all of these areas here based on this particular swing, and then rallied back up into 59.74, which was that 200% retracement of this swing. So again, market was very volatile and very active. I did end up with 2 lots on this CL trade on the day. We did end up with a 5-to-1 risk reward. Let's talk about how we ended up getting into it and why we ended up getting into it. Let's move this out of the way again as well. Okay, and we'll put, this is the CL chart. So again, we talked about, let's just turn off the market maker levels for just a minute. They do provide you with good context. We're going to turn those off for just a second. So we said that 77 was going to be an area that we were expecting it to rally, right? We come down to 79, a little bit lower, a little bit lower, a little bit lower. We get up at the top up here and look at this area here. Now you have basically 1, 2, 3, 4, 5, 6, 7, 8 bars that could not really get up through it with any conviction. And so once we came back down into this 77, you had this long rally bar, then you had these 3 bearish bars that pulled right back in. This is where we get in, and then we were looking for a target down to 59.15 is what we talked about You did get a bit of a pullback. I get stopped out at 31 on the trail stop. This takes to 39, and then it continues that bigger push to the downside. Now, if you were to turn these levels off for a second, okay, and to turn these structure points off, you can also see that our daily structure target, we kicked the signal, paid the target, and once we could not, again, get above that targeting zone and the 161 or 1.27% range extension of the previous day's range, then the market sells off into this area here and then continues that downward push. And again, it really did break a lot of our structure. These are the overnight levels, and you can see how this was the other area we were looking at 58.92 to come down and target. We get stopped out up here, and this was trying to be our final target, even despite the fact that I talked about 59.15 on the video. We had made an adjustment on the fly, and we were trail stopping down. I get trail stopped out at 31 on this move down. You turn your revision signals on, and these give you additional places to look. And again, just really broke most of the structure points in the session today. It was just a wild, or yesterday rather, it was just a wild, aggressive session. So I've got two trades here for you. The first trade that you're going to see is that ES trade. You're going to see me get in. We're going to condense these trades down into about 4 minutes. So I'm going to cut them up, speed them up, put some music behind it. Otherwise, we would be here. You'd be, I think ended up being an hour and a half worth of trades, or maybe it was an hour worth of trades. Anyway, it was a lot of trades. It would be a long video to watch. But again, what I did is cut it up into pieces, put some music behind it, sped it up so you can kind of get a feel for where we get in, how we were managing the stops, and what the final targets were when the trades ended. So having said all of that, I'm going to cut it short here and let you watch the OTG trades of the day. 89.5 short. 89.5 short, 92.5 is the stop. In at 89.5 short, 54 is the target again underneath. And I'm in two lots there. It's 76 short on the CL. 76 short on the CL. And you're targeting at 19 underneath. 59.19 is the target on the CL. right, so as you can see from the video, price, even despite the fact that it was sped up, the price action was super aggressive on Friday. And so again, we'll be approaching this with one lots, at least initially on Friday, or on Monday rather, to see how the market is behaving, see if the uber aggressive liquidity is still in play, and then we will be making decisions off of that. But initially, we will be reducing the risk again as we head into the trading day on Monday, and we will get back after it then. So as always, I want to say thank you for watching the videos here at the Oil Trading Group, and until next time, I want to wish you good luck and good trading.